This coming Wednesday, the Bank of Korea will decide on whether or not to raise interest rates, with a move in favor of an increase which would mark the first time rates have been raised 3 consecutive times. Experts say that a 50 basis point rise is likely due to worsening inflation, while concerns remain about heavy household debt. Our Rae-hyun has the story.
The Bank of Korea is likely to weigh heavily toward an interest rate hike of 50 basis points on Wednesday. At least that's what analysts predict. The consumer price index rose 6% in June from a year earlier, accelerating at the fastest pace since November 1998. Inflation expectations hit the highest level in about 10 years in June too, with people expecting consumer prices to rise 3.9% over the next year. That's the highest figure since April 2012. Considering the U.S. Fed's recent rates increase of 0.75 percentage points and the rising Korean won-U.S. dollar exchange rate, experts say increasing by 25 basis points would not be enough to tame economic challenges.
If Korea raises 25 basis points instead of 50 points, it could cause problems in the foreign exchange market like capital outflow, as the U.S. already increased its rates by 75 basis points.
In April, the Bank of Korea decided to raise rates by 25 basis points to 1.75. Then in May, it once again raised rates by 25 basis points. Should the Bank of Korea decide on another increase in the coming days, it will mark the first time ever that rates have been raised on 3 consecutive occasions. Some experts say this may lead to shrinking consumer confidence.
Still, increasing household debts will remain as a big issue when considering the big step of raising rates by 50 basis points. Also, corporates could be in danger of bankruptcy due to high interest, which will bring a shrinking employment rate.
Meanwhile, experts forecast the interest rates may reach 2.5 to 2.75% by the end of this year. The figure currently stands at 1.75%. Rae-hyun, Arirang News.